Hi, my name's Phil. I like talking about politics, and in this video I'd like to discuss some of the various ways in which people are arguing more taxes from the rich should be considered, most of which would actually end up bringing in less tax revenues and therefore mean more cuts. But there are absolutely some ways in which Labour could feasibly tax the rich more, rather than make the cuts which are, quite frankly, harmful to growth, which is supposed to be Labour's number one priority. And one former Labour minister who, like Rachel Reeves before her, has worked at the Treasury before entering politics, has some ideas. But first, for daily political commentary, please hit the subscribe button to stay notified. So before I go over what are, as far as I can tell, some of the genuinely credible ideas, what are the constraints which Rachel Reeves faces, which some people just are not taking account of? Well, the first thing to note is that the government are not actually able to just rewire the economy. Like it or not, and I'm sure most of us do not, private investors are the pantheon who must be appeased with all economic plans. It's as simple as that. You know, you may be convinced by various economists that this idea, oh yeah, if we did this, that would work, and that absolutely wouldn't. If people didn't know it before, Liz Truss demonstrated it. If the Chancellor announces something which makes investors in the gilt market fear that the UK will not be able to service its debt, the pound will tank. It's really that simple. The Chancellor will certainly lose her job. The Prime Minister possibly also. There will then definitely have to be cuts to the budget because you will have blown a massive hole in it, and the public will likely not trust the government on the economy ever again. So demanding that the Chancellor do something that will worry investors in the gilt market is a complete non-starter. If you tank the pound, your economic plans do not survive. Then there's another problem. So if you hit ordinary people with taxes, we pay them. And I think that is why people say, well, why don't you just apply more taxes to the rich, like 2% wealth tax, something like that? Because we're thinking from our point of view. If the Chancellor announces some tax, you know, that affects us, it's like, well, there's no say in the matter. We're going to pay it, right? Now, yes, okay, there are some tax cheats, even at the sort of poorer end of things. You get tax cheats across all levels of income. But assuming we obey the law, we pay them because there's no legal alternative. Rich people have a legal alternative. They just move the money. There are all sorts of tax avoidance dodges you can employ. Now, it has to be said, Rachel Reeves has promised to tackle tax avoidance, and she is actually doing so. She's made moves that are already resulting in some sellers of tax avoidance schemes shutting them down. In fact, HMRC are actually aggressively going after these people, but you can only do so much. You cannot just stop someone who is wealthy shifting their money out of the country like Jacob Rees-Mogg did to protect it from Brexit. So with certain taxes on wealth, there is a risk that so much of the targeted money gets sent out of the system, you actually end up taking less in tax revenue because not only do you not get the extra taxes you want, but because they've moved their money out of the system, they're not even paying the standard rate of tax. So it might not sound intuitive, but yes, you can actually apply taxes to the rich in such a way that your tax revenues go down, not up, and then you've got to make cuts. You know, so, I mean, the reason is like a 1% tax rise for us, that doesn't amount to anything that's worth hiring an accountant and a lawyer to move your money, right? But 1% for someone who's extremely wealthy, yeah, that's definitely worth going to that trouble. So if it's even possible for a tax rise to result in lower tax revenues because of this movement of money, Reeves won't touch it because it's too risky with an economy that's flatlining like ours is. It might be worth if you're not sure, it might be worth the risk when you've got more growth, but not now. And also, it's not just Reeves who would have to be confident that a move would definitely raise more taxes. The OBR has to as well. See, if Reeves thinks that a move would generate more tax revenues, but the OBR says no, well, she has to defer to them. For example, it is the OBR's figures upon which the latest Joseph Rowntree Foundation report is based. You may have seen it. It says that people will be worse off come the next election. Now, this will 100% not be true. Labour know that it's their top priority to make sure people are better off. But this isn't because the Joseph Rowntree Foundation are getting their maths wrong. It's because Labour are pushing various policies such as planning reforms, closer trade with the EU, which the OBR at the moment is not able to account for in their growth forecasts. So Labour are confident that they've got moves which are going to grow the economy more than has been forecast, But the OBR are saying, yeah, we don't know enough to be able to factor it into our model. So computer says no. So what you need at this point, you need measures which would not spook investors in the gilt market, otherwise it's curtains, but also not risk lots of money being shoved into legal tax avoidance schemes, resulting in even lower tax revenues. But there's another hurdle to get over as well, even if you get over those two. You also have to make sure you don't spook investment in general. Like if a measure would risk inward investment because very wealthy people or corporations are going, oh yeah, Britain's not the place to invest, they tax the shit out of you, then what sounds like just making the rich pay their share turns into a smaller economy because people just invest elsewhere, the jobs will disappear, doesn't help anyone. And these concerns are the reasons why the vast majority of what sound like simple ways to just tax the wealthy more won't work. And why people are now getting into their heads that Rachel Reeves is against taxing the rich. Oh, she must just be a Tory, right? But it doesn't mean the situation is hopeless. There are options that I think Reeves should be pursuing. And a former Labour minister, Helen Goodman, produced a list in The Guardian recently. Now, Helen Goodman has held roles in the Treasury and during her parliamentary career did work at the Department for Work and Pensions, albeit it was a ministerial career cut short when Labour lost the 2010 general election. But still, someone who's seen how things work from both the Treasury and government department end. And her ideas are certainly more feasible than some of the sort of more obvious ideas that get bandied about. So she mentioned a few which have promise, like one of them, well, a couple of them actually, but one in particular I've discussed before and is definitely where I would look, and it is land tax reform. See, the beauty of land tax is that owners cannot just hide half of Hertfordshire in the Cayman Islands. Also, you can adjust the rate according to how usefully the land has been used. It's brilliant for encouraging things that are useful to society and discouraging things that are harmful. If the land is used for your primary residence, so let's say it's the land upon which your house sits, right? Well, it can have a lower rate. That's your primary residence. That's useful. You need a house, right? If it's for a second or a holiday home, well, you don't need that, so you can pay more. If the land is used for a housing development, you've bought land and you're going to develop some houses on it. Well, we need more houses, brilliant. Or if it's for farming, well, we need food, brilliant. So you have a lower rate. But if you buy the land and it's sat vacant for a long time, or you're using it as a grouse moor or something, you go, yeah, that's not useful to us. You can pay top dollar for that. And that wouldn't concern gilt investors at all. In fact, that would be a stable form of income. That's brilliant. That would alleviate the concerns of gilt investors. Also, it wouldn't upset business investors either. See, even if a company's going, well, we would need to buy land to build this factory on, they wouldn't have to be worried about the land tax on it because you could offer a low rate of land tax if they are providing enough value to the economy. For example, you might get a discount if you are employing a lot of people. You might even offer a better discount if you employ more people from demographics who find it harder to get into work. Land tax is such a beautiful concept. You can use it for all sorts of things. It can solve so many problems. And backed up by economists of serious weight, it's not just that it sounds good to me as a non-economist. Like, you know how Trump talks about tariffs? He goes, oh, the beautiful tariffs, the most beautiful word in the world. That's how I feel about land tax. Gilt investors would approve because very stable form of income. Business investors would be fine because you'll be giving them a very low rate because they're investing. You can't just hide this form of wealth from HMRC. It's win-win-win. But there were other proposals from Goodman as well. Some I've talked about in the past. So I'm also confident they don't fall foul of the major hurdles because I've not seen any arguments against them. One is capital gains tax. Now, Reeves did indeed increase this in the October budget. I was wondering if she would normalise it with income tax. Now, she didn't. I cannot for the life of me understand why she didn't. At least over time, phase it in. Goodman reckons that if she did, that would bring in about £14 billion. Now, I am going to point out any extra tax, particularly on those who are able to avoid some of it, never actually brings in as much as is claimed. Because the way people work out how much it will bring in is always the amount of like wealth that's targeted by the percentage rate. But some money will be moved, right? But it would still raise significant revenues and would pretty much have covered the loss of headroom that has been lost since between October and now. There'd have been no need to restrict PIP, nor to cut civil servant numbers for no adequately explored reason. Tax relief on pensions for high earners being brought in line with the standard rate was another of her ideas. Goodman reckons that could bring in a similar amount to the capital gains tax. I think she thinks about 13 billion for this one. So again, even if it didn't quite bring in that much, because people, moved their money about, even if like those two ideas together, capital gains and pension relief for high earners, even if they fell short of estimates, which they always will, put them together, that would definitely have avoided for any of these latest moves by Reeves. She would have been able to keep her October budget intact. And the problem is that the moves Reeves is making now is taking money out of the system, which means you're hampering economic growth. I'd love to know why she hasn't done these things. Like the land tax I get could probably take several years for you to work it out, but these two would be quite quick and easy. And I've heard no reason. Again, I'm trying to think of my test. Would it spook gilt investors? No. Would it mean people move their money in such a way that you actually end up taking less in tax revenues? No. Would it affect investors in general, inward investment? I don't see how. Someone can explain it to me, but I don't see how. Goodman also mentions loopholes for city lawyer partnerships. I don't really know much about that, I'm afraid. Taxing internet giants to compensate high street retailers is one I've seen mentioned quite a bit over the past few years. In general, I would say, yeah, although I think at the moment, I guess with the tussle with Trump, probably not one to go for right now, because that would mostly hit the American tech companies that Trump is already trying to protect. Although one she doesn't appear to mention, but I will anyway, is VAT on financial services. It came as a massive surprise to me. Only a couple of years ago, I found out that financial services are exempt from VAT. Why? Legal services aren't. I mean, you might go, some people need financial services. Some people need legal services, but you have to pay VAT on those. So anyway, although there are definitely good reasons not to apply some of the lazier tax measures bandied about by some people on social media, there are still options which wouldn't fall foul of any of the traps. I would certainly like to hear why Reeves has not gone for them. Unfortunately, nobody's asking her. Not journalists, not even MPs. But there we are. Those are my thoughts. Let me know yours in the comments below. If you've enjoyed the video, please click the like button and subscribe for further content. If you'd like to support the channel further, you can click the join button for memberships. Thanks for watching, and until next time, I'll see you later.